Hi, this is Alessio. Hope you're well. In this particular video, I want to draw your attention to this particular chart. The market dropped down to this important support level on the chart, the S&P, plus also, after the crash we've seen over the last several weeks, we also had a strong bounce just yesterday, as we can see here. So the market managed to bounce, a bounce, by the way, we had been expecting. Also, we'll take a look at this important data about the fear and greed index. Something incredible just happened recently, plus also this important chart, which is called the capitulation indicator. Could this be indicating or telling us that we're seeing capitulation on the stock markets as the market dropped and crashed into some important key levels? Well, we shall discuss this in more detail in this particular video and this important chart here as well, and what this potentially means. All right, guys, join me. All right, guys, welcome back. Now, in just a few minutes, I'm going to discuss with you some important charts. For example, this one, and also this particular chart here, and also some important data, which I think are worth looking at here regarding capitulation and the fear and greed index. Before we go on to those charts, I want to first of all start with something very important, because I realize some of you watching this video right now, some people are probably thinking that the markets will not do anything until we get some kind of news about tariffs and Donald Trump's ideas and decisions about tariffs. Guys, always remember this quote from Bernard Baruch, which I think is by far one of the most important quotes you need to remember. Show me the charts and I'll tell you the news. In fact, Bernard Baruch, also a great investor, he said this. He said, all economic movements, by their very nature, are motivated by crowd psychology. He said, without due recognition of crowd thinking, our theories of economics leave much to be desired. So even back then, a century ago, there was a great investor, Bernard Baruch, who was telling us, look, it is not the news we should be thinking about, but crowd psychology, the charts. It's the charts that tell us what's going on in the market. Most people today, again, the average person out there does not know this. That's why I want to try my best to educate people about this. And the reason I mention this, guys, is because it's hilarious that some people right now are saying in the comments section, oh, well, we had no warning this was going to happen. This crash was going to happen. Seriously? No warning? Back on February 10th, when the market was about here, I put out a video. You probably saw it. The video was called A Big Danger Signal. There it is. A big danger signal just flashed for stock markets, not seen for 3 years. And what was the major warning signal I gave on February 10th? Let's have a quick look. We'll come back.
According to a recent article from Barron's, they quote Jason Gephardt. Jason says, the historically good run for stocks may be coming to an end. Why? Because of something called the Sharpe ratio. Jason Gephardt is saying and warning us that the Sharpe ratio has peaked and is now beginning to roll over in the opposite direction. And what does that mean? Jason says that historically, whenever the Sharpe ratio has peaked and rolling over, this means firstly the easy ride for the stock markets is coming to an end, but also we could see a lot more volatility, a lot more ups and downs in the markets. In other words, the easy period where you could just buy the dip willy-nilly on any drop in the markets may be coming to an end. And it does mean we have to become a lot more cautious about the stock markets.
All right, guys, so as you heard, even as far back as February, when the market was here, we were warning about trouble in the stock markets. That was not all. As I'm sure you know, in the interview video we did with Manuel Bly back in March, at the beginning of March, when the Dow theory bearish signal was triggered, we gave another warning about major trouble ahead for the stock market. But here's what I said to our members on March 9th, because after a Dow theory bearish signal, the odds increase for a potential minus 16% drop and even an 11% drop on the S&P. That would indeed take it down likely into this range. I would say anywhere from between 5,200 to potentially 5,160 to potentially 5,130. All right, guys, as you heard in the video on March 9th, I warned our members that in fact the market could drop quite severely by 11% down to these levels that we dropped down to, in fact, near the 5,000 level, 5,200, 5,000 levels. And by the way, more recently, just a few days ago, here's something else I said to our members. The bottom line is that the markets are becoming so extremely oversold that the probability is now increasing for a strong bounce. And I should say that the next major rally and bounce in the stock market could very well come back up and fill this gap here at near 5,400. That's an open chart gap. And indeed the one here at 5,600 here as well. All right, guys, as you heard, that these gaps have a tendency of getting filled. Here they are. So you can see that gap right there on the chart. The market came up, and as a matter of fact, this bounce filled that gap. In fact, there's another one right about here, just under 5,600 here. So that gap may also get filled if we get more of a stronger bounce So there's another gap that might get filled here as well. So we've got two gaps here on the chart. The first one has now got filled as we expected. And there's another one right about there that may also get filled in the next several days, potentially next few weeks. Okay, so far so good. The market is now following through with our overall expectations. But the question I'm sure you're probably thinking is, okay, but have the markets finally capitulated? Have we now bottomed here in the stock market? That's what I want to talk about now. So I want to first of all draw your attention to something incredible that I just saw recently. That's the Fear and Greed Index, the CNN Fear and Greed Index. I have not seen something like this probably since 2020. Now look at this, guys. The Fear and Greed Index, as per this data, dropped to 4. 4? So that's one of the lowest readings we've seen on the Fear and Greed Index. Yeah, I mean, this was just a few days ago. So again, showing extreme levels of fear. Guys, remember, the markets are not rational. Okay, they're not driven by fundamentals or news as everybody else thinks. The markets are driven by sentiment, by emotion, by the behavior, the irrational behavior of the crowd. But let me also show you this. This is also really fascinating, courtesy of Jason Geppert of Sentiment Trader. Now, he showed recently what's called a capitulation indicator, which I must admit, I didn't even know there was such a thing as a capitulation indicator. But Jason essentially compiled a whole range of data, as you can see here. And what that shows is that the stock market, the S&P, just fell to a region of capitulation here, below the minus 4.25 region there. And according to Jason, whenever this happens, this typically shows an extreme oversold condition, which exemplifies, in other words, it indicates potential capitulation in the stock market. And we've seen something like this before, by the way. For example, in the year 2020, when the crash occurred in 2020, 2018, when this particular indicator falls below minus 4.25, we typically see capitulation. Or indeed, it shows that a market could be getting close to a likely bottom. One thing I need to mention here, guys, is that capitulation does not necessarily mean the bottom. I've mentioned this before, but capitulation is actually more of a zone. Okay, so the signal from Jason was issued on April 8th, so just a few days ago. So essentially when the market dropped down to these levels. Okay, so we have to remember, guys, that again, even if capitulation was issued at the time, capitulation by itself does not necessarily mean the bottom. The market could potentially still go lower and it could still be capitulating. All right, I'll give you an example of this in just a few minutes. But before we go on to that, let me also show you this. This is the chart of the S&P futures. And I noticed something just recently. On the S&P June futures, we saw an extreme oversold condition on the acceleration extreme, a red acceleration extreme. In fact, I showed this to my good friend Manuel Bly as well. He found this very fascinating. So we had red acceleration extreme, as we can see there, when the market was dropping there. So yeah, that's a very important signal. It often shows a region of potential capitulation. And by the way, take a look at this. This is the chart of the Dow Jones Transportation Average. The Transportation Index also, as we know, is an important leading indicator. The Transportation Index, as it crashed hard, it also triggered, as we can see here, it flashed an extreme oversold condition and indeed a capitulation signal, a potential capitulation signal on the acceleration extreme, a red acceleration extreme. But let me show you this. Back in the year 2020, in the COVID crash of that year, notice what happened after we got the red acceleration extreme. Okay, so notice as the market was dropping here, look at this. We finally got a red acceleration extreme here on that bar there, indicating a likely capitulation. Now notice that even though we got the red acceleration extreme, the market did continue to drop further lower. In fact, from the time of the capitulation signal, the red acceleration extreme, the market did continue to drop a further lower, about 8 to 10% lower. So we have to remember that capitulation does not necessarily mean the bottom. Okay, sometimes it is the bottom, but sometimes price can still go a bit lower into a capitulation zone, into a region of likely capitulation before finally bottoming and then finally reversing direction and going higher. So please remember, guys, that the word capitulation has been misunderstood by a lot of people. Capitulation does not necessarily mean the bottom. It's more of a region. It's a zone. So over here, we entered more of a capitulation zone, okay, than the exact bottom before finally price reversed and moved higher. All right. Let me show you another example here. This is from the year 2018. Again, we got a red extreme acceleration signal here. And I only pay attention to the red and the magenta signals. I ignore the yellow and the blue and the orange ones. I only pay attention to the red or purple magenta ones. And again, we can see that indicated a likely region of capitulation. Okay, so there it is. So in other words, that was giving us a high probability warning sign that the market could be reaching a turning point, a likely capitulation and a likely turning point or inflection point where it could potentially bottom. All right, again, remember, it is not the bottom that we're looking for, but more of a region, a zone. All right, and then we can see what happened afterwards. The market then rallied significantly after that. So guys, in a nutshell, I think that with the fear and greed index falling to an extreme low of 4, then looking at the capitulation indicator courtesy of Jason Geppert, also reaching a likely level of capitulation, as we can see here. All right, and also with our own, let me just go to the chart, with our own indication on the S&P futures, again, red acceleration extreme. And as I mentioned earlier in this video, the recent drop in the stock market came right down to this yellow trend line, this rising trend line going back some years. Now we'll see if the market wants to hold this level or not. It's too early to call, all right? But we did come to an important support, the trend line support and the lows we made in the year 2024. So it's an important and interesting level for the market to hold and bounce, which we have done. Now let me just say this before I finish this video, which is that one day does not reverse a trend. All right, guys, so just because we've seen a very strong bounce here in the stock market, like we saw yesterday, okay, this by itself, this one-day bounce, okay, which occurred on Wednesday, does not by itself reverse a trend, all right, guys, or even 2 or 3 days. What we need is at least a few days. In fact, Manuel Bly, he said to me recently that he's looking for at least 5 days. All right, I'll write this down. He said he's looking for at least 5 days of strength in the stock market to see if the market holds support. All right, so we're not there yet. We've seen barely 1 day, maybe 2 or 3 days, holding support. That's not enough. Let's see if the market can hold this region of support, this capitulation zone. So we need to see if the market can hold above this capitulation zone for at least 5 days. So far, it's been, let's say, 1 to 3 days. That's not enough. And also, very importantly, we need to see if the market holds above 5,000. Also, let me show you one more thing. Let me get my Fibonacci retracement tool here. Okay, so if we do a Fibonacci retracement from this low to this high, you can see where the Fibonacci levels are. The 38.2, the 50%, the 61.8% golden ratio retracement levels here. Because after such a strong bounce and rally, we usually see a pullback. Okay, pullbacks are normal after such strong bounces. Now we'll see if this bounce continues and fills this gap as well before we see the pullback. We'll see. But let's wait and see where the next pullback comes down to. Will the pullback be corrective or will it be impulsive? And I'll explain this more in the next member video. But the bottom line is this, guys, that we need to see if the next pullback on the stock market, on the S&P, whether it can hold above this important region, I would say importantly the 61.8% golden ratio, and also 5,000. Because if the next pullback drops below 5,000 and let's say 49.53 here, then guess what? We're going to see another lower low into the capitulation zone. All right. Remember, the capitulation zone is below here. For now, anyway, for this week and for the next few days. At the moment, the capitulation zone is anywhere from here to even lower levels here. All right. So that's our capitulation zone. Again, it's not the bottom. It's more of a region. It's a territory or zone. So what we have to do is be patient and let's wait and see what the next pullback in the stock market will be like. Okay, so at the moment, as I'm making this video right now, we can see the futures. The futures are down from yesterday. We're seeing the beginning of what may be a pullback. We shall see. What we need to see is if the next pullback, is it going to be, first of all, corrective or impulsive? That's the first thing. And also, will it stay above 5,000? Okay, so that's the key question. Will the next pullback, will it be able to stay above 5,000? Because if it falls below 5,004,953, that means, guess what? We're going to probably drop down into the capitulation zone again. But if the stock market can remain strong for a few more days, at least for 5 days from the time we reached a low here, so far it's been 3 days. Let's see how the market finishes the week by Friday and going to the start of next week. If the market can remain strong for a further few days and stay above 5,000 level here, that could increase the likelihood that potentially we've bottomed. Let's wait and see what the market does. I should say personally that based on the data that I'm seeing right now on the charts, again, from everything from the, as I showed to you, from the capitulation indicator to the fear and greed index, and the fact that the market is holding this important trendline support, these are all positive and bullish signs for the stock markets. And by the way, guys, I'll discuss this in more detail in the next member video. So guys, make sure you watch my next member video on Sunday. It's going to be quite interesting. I'm going to go into more details about my potential targets and also the likely Elliott wave counts as well. So if you're not a member, you can join that link. You see it right there. Thank you very much indeed. I look forward to the next video update. Bye for now.